like for people that like are trying to time out the interest rates, right? Like nobody knows, bro. Like in Wolf of Wall Street, right? Fugazi, right? It goes up and then nobody fucking knows, bro. You know what I mean?
Right.
So the idea is to timing it out to me is good luck. You see what I'm saying? I think the more sensible approach is, hey, what can I afford? You know, what's within my budget, within my means? Let me try to acquire that right now because, right, in my opinion, let's say we don't know whether they're going to go up or down. Right. Nobody knows. Okay, so let's say you get it. What was it today? 6.
So on my end, I could get a 6.75.
Okay, 6.75. There we go. All right. So what happens if the rate jumps to 7.5? You're gonna, if you locked it in at 6.75, you're gonna be like, oh man, I got a good rate. You see what I'm saying? Right? And let's say it moves. In my opinion, it's not gonna move much anytime soon. But
Right.
Let's say it were to move, something happens. You know, you never know. That's the whole point, right?
And we could look at that. We should pull up an example of what the monthly payment what the difference would be from what the current rate is, and if it was to jump, let's say to 7.1, whatever.
Yeah,
You know,
Yeah.
let's see what it would what it would be, right?
Yeah, you're gonna be like, awesome.
That's a couple hundred, man.
Yeah, no. So this is what I'm saying, right? So you lock it in at 6.75. Rate goes up, you're gonna be like, oh man, I did well. You know, I locked it in lower than what today's market is, right? All right. Let's say it goes down on you. Let's say by some miracle it goes down to 5.5. What are you gonna be doing? You're gonna be refinancing.
Yeah.
You see what I'm saying? And taking advantage of that rate.
Yeah.
Okay. So the point in that whole thing is that you had the house to do this.
Yeah.
You see what I'm saying? Trying to time out. Trying to time. The rates, like we were saying, right now, we were just talking about a client that dropped out basically right now and says, hey, look, it's too competitive, right? He wants to live in a competitive place right now, and it's competitive. That's what's going on, and this is almost at a 7 rate, and properties are getting multiple offers, right? And I'm like, you're waiting for the market, you're waiting for rates to drop, and the market to calm down. I'm like, if rates drop, the market's gonna go crazy, bro. You know, it'd be 20, 30 offers like it was during the pandemic.
You're doubling the competition at that
Yeah. Like, it's insane, man. So that whole trying to time it out right now, man, I understand you're saying, hey, rates are high because, they're not at pandemic, rates at 2-3%. I get what you're saying. I guess on if you look at average, mortgage rates over the last, 30, 50 years, whatever you want to say, they've been around, 4.5 to 7%. So we're right in around average right now, in my opinion. Maybe on the high side of average, but right in average. It's not crazy. There's definitely been higher rates than this. You know what I mean?
I think historically we've been at a higher rate. I think over 8. I think there was it steadily had
for a while?
Before the pandemic, what was the rate?
So right before the pandemic, I would say they were hanging around in the 4s.
Yeah.
Prior to the pandemic.
High 4s.
High 4s.
Mid 4s, high 4s.
Yeah. I can understand why people, like you said, people were spoiled for a while, and then
that's really the problem.
The people who took advantage of that are reaping the rewards right now, right?
The people gotta understand, man. 2%. That was 2 point whatever people were getting, 2.5. Whatever people were getting. Historic. Like, you gotta understand. Like, so a lot of people right now, they're waiting for that to happen again. You know what I mean? I'm like, like I said, nobody knows the rates. I'm not telling you it's not gonna happen. In my opinion, it's just not likely to happen because that scenario was historic.
Yeah,
bro, it's never happened before.
I don't see that ever happening.
Yeah,
I don't need
At
it.
least in the near future.
I don't either. I don't either.
You never know.
Yeah.
So my whole thing is, buy what makes sense for you. Now, like this guy, right? He says, okay, I'm gonna save more money. So you know what, Renee? They only approved me. I think they approved them for like 400 something, right? Whatever. They only approved for like 400,000.
Yeah.
All right. So his whole thing is, he's looking at houses for like 425, right? So we're trying to kind of like, make that happen, but he's realizing, hey, I'm getting beat out, right? Mm-hmm. So his theory is, hopefully the market improves for me, right? And I'm gonna go ahead and save more money so then I can start making up that difference. Okay, that makes sense for me, right? If you're seeing, because I'm also not saying, hey, settle for something that doesn't make sense for you, or settle for something you're not gonna want.
Right.
Yeah.
I tell clients, man, the worst thing is going home. I mean, going to work all day, having a hard day, and then coming home to something you're not even happy about. It's like, why am I even going to work for, right? So no, I think home ownership, you should be proud. Like, it should be something you're proud of, or at least happy with. You know what I mean?
And then that can lead to the client having like a sour taste in their mouth from you, like saying, like, kind of saying like, hey man, like
kind of push me towards.
Yeah, he kinda pushed me
or telling you what you can do and
Yeah.
can't do. Nah, so that's what I'm saying. So this client says, hey, what I'm saying is I disagree with him saying that he's going to wait for the market to get better in case rates drop or something like that. If rates drop, bro, the market's going even crazier, right?
Yeah.
Now, I do agree with him. He's kind of priced out of what he wants, right? And this is what we talk about. Find out what you want, you know, if you can get what you want. He's like right there. He's right. He keeps getting beat out by maybe $20,000 or something like that, right? So he's right. He says, you know what? For what I want, I realized already. We've been at it for like a month or two. I realized that, yeah, it's probably not going to happen. I agree with him. I was trying to do the, you know, hey, look at the value here, right? But his spouse isn't having it, and I get it. That's what I'm saying. When you want something, you should go get it.
Yeah.
So he's saying, I'm going to go and save money to compete. That makes sense to me. You see what I'm saying? You realize what was happening?
it's not that he doesn't want to buy. It's just that he doesn't. He realizes what it's going to take for him to be able to compete with what the market
You got it.
is giving.
And
so
that
he's
I
like, hey, I'm
totally-
gonna take a
He's
step
gonna
back.
adapt to the market.
I'm gonna prepare and come back.
Yes.
Cool. That's fine, right?
That makes perfect sense.
It's not like he's saying, nah, I don't want to do this no more.
Exactly.
You know, he's
exactly.
like,
No,
no.
he's just, you know, he's lining his ducks up like for what he wants. You know what I mean? And that, to me, that makes perfect sense, right?
100%.
Yeah, yeah. So this is different. That's what I'm saying. But hey, how did he get to that point? Right? He reached out. We put him in touch with Alvin. Alvin gets him pre-qualified. We look at the numbers. We look at different areas. We go check out the houses. You know, and you come to a conclusion. You know what I mean? So that's where I want to get people because I feel like most people, especially real estate. Honestly, man, people just making stuff up in their heads, bro. Like scenarios in their heads.
People like to go in blind and think that they know.
A popular thing that happens to me a lot is like friends or family members, or you know, they'll call me and say, hey, they'll send me a house, be like, hey, I want to buy this house.
Yeah.
You know, I'm like, okay, great. Have you talked to a lender? They're like, no. Okay, well, you know, what's your credit look like? How much, you know, what kind of job do you have? Like, you know, they're like, you know, I got this and that. I don't know what my credit score looks like. Okay, well, you know, the first step, I'm gonna be honest with you. I always tell them, like, let's get you to a lender, right? We got to find out what your finances look like. We got to look what your income looks like, and we got to even see if you can afford this house, right?
If you even want to afford
and then we hit the roadblock of, okay,
I'll see, yeah.
I'll
Get the
let you know.
documents
I'll
together.
let you
I'll let you know.
yeah, let me call you back. I'm like, okay, there you go.
Yeah.
You don't really want to buy, you know what I'm saying? Because if you do, you're gonna at least like
take
you
the
know
next
explore
steps.
all the options, right?
Yeah.
Because in talking to a lender is the first step because that's where you find out if you can even afford a house.
Yeah, that's what I'm saying. I think people want to buy. Like they're
Yeah.
reaching out to you for a reason.
Oh, yeah.
You know, I think they want to buy. I think it's they don't want to go through the process that it takes to buy. I think that's what it is. They're afraid of the process because we've talked about this on this podcast before. The process exposes you. You know what I'm saying? And it sucks. But I rather, me personally, I'd rather be exposed. If I'm trying to reach an objective, I'd rather know what the roadblocks are, you know, how I'm going to get there. You know what I mean? That's what I don't understand. You know, now if people charged you for these consultations for this information, then I would get it. It's like hey guy, you want me to pay you $500
Just to talk.
$5,000 for you to tell me that my credit's bad? I already know that. Like I'm not gonna pay you to do that. So if it was like, you know, you had to pay for this meeting or this information, I would understand people, right? If it was that you had to sign like a commitment that, hey, if I give you the information, you have to buy with me. You see what I'm saying? Or you have to use me. Then I would understand people, but that's why I don't understand people because those things aren't true.
Yeah.
You see what I'm saying? You're not paying for the meeting.
Let's get down to, let's try to understand what is the biggest hurdle, right? I know one of them is like, you know, people don't really like being put out in the spotlight. Like, hey, like you're looking at all my sensitive information.
Yeah, I
you're
get
looking
it,
at how much money. You're looking behind the curtain, and people don't feel comfortable with that.
Yep.
So, what are some of the things that you know that? How do we overcome that? How do we kind of take the pressure off and just like, hey, like, you know, you're gonna have to go through this regardless, you know.
Yeah.
And it's a one-time thing, right? So it's better for you just to know, right? Even if you're not in good shape, at least you'll know, right?
Yep.
That's kind of like the whole purpose.
Yeah, no, I personally, I always try to, you know, do it in that sense. I think we touched on it in the last time we talked, which was like the non-commitment, I feel like it's one of those things that it's just an informative meeting, right? So having one of those meetings so that way they can, feel comfortable where it's pressure free. They don't have to feel like they're making that commitment at that moment. I feel like it going in knowing it's just informative kind of eases that stress, that tension, having to know that they're going to meet up with somebody who's going to look at all their finances, all their personal information. So I think just going in with that mentality, kind of letting them know this is just an informative meeting. This is just so that way you know what you can qualify for now and what steps if you don't, what steps we need to take to get you qualified. Having that mindset going in kind of gives them a little bit of ease in the whole process. It's like, okay, this guy's here to help me. So that way they know it's like, I'm on your side. I'm not here to tell you no. I'm here to help you. Get
there. You go.
So that's I feel like going in with that mentality, I think helps a lot.
Yeah, and then another thing that really stops people is when they ask, right? I think the second most asked question is like, are they going to look at my credit score? I'm like, yeah. And then they're like, they get self-conscious, right? Because of course everybody does, right? But one of everybody's biggest worries is like, what their credit score looks like. And they're like, oh, well, I gotta have this on my credit score. And, I'm like, okay, hey, look, I'm not the expert. I'm not here to criticize you, right? I want to put you in contact with the expert that he's going to be able to tell you which we don't even know if that's even going to affect you being able to buy a house. Because like you said, some debt, some things don't affect you being able to buy a house. And that's what I think where people need to realize is like, you will never know unless you talk to the person that knows.
So one thing that at least what I've realized is a lot of people are very informed with what their credit score is, right? So your banking apps, people could download Experian, Credit Karma. All these are free apps that you have to your disposal, right? So most people are pretty informed with what their credit score is.
It's mainly like the older generations that don't know.
Exactly. Yeah. So I feel like most people that are going into these meetings that have concerns with their credit, they have an idea of what their credit score could be. It's what the details behind it is. It's like, what do I need to do to get it better? And that's where if they express, that issue saying that, oh, well, I don't know what my credit score might be. I know it might not be great. That's where I go in and kind of just make them feel better about the situation. All right, if it's not where it needs to be now, let's take a look at it and see what things we can fix to see that you get approved.
And we've had Av and I, we've had clients that already tell us up front, hey, my credit, I know it's not good, or hey, I'm sensitive about it. Or we have people that we ask them, and like you said, they're well informed. They say, hey, I'm like at a 6, I'm like at a 620, 630. So we know that's right around 640. We tell the person, hey, let's not even check your credit. Right out. We tell people, hey, we know now you told us.
Because it's a hard inquiry, right?
Yeah, exactly.
Okay, so let's talk a little bit about that. What effect is that? How much does your credit score? How much does somebody's credit score?
But hold up, though. Let me finish my point. So, like, the whole thing is we don't necessarily. Alvin doesn't necessarily. Okay, here's the thing. What type of meeting is it? Hey, I need to buy now, right? Or hey, I'm thinking about buying 6 months from now, right? Okay, if you're thinking about 6 months from now, then we know you don't necessarily have to pull the credit right now. You know what I mean? I'm sure if you just pull up Credit Karma like you said, and hey, we see you see over 700, hey, we're good. Like just to give you numbers.
Yes.
Because remember what the meeting is for. The meeting is just to get numbers, get some information, get the wheels turning. You can go home and start planning. Make your financial decisions. Yep. So the credit doesn't have to be pulled necessarily. Now, if you want to move forward seriously, yes, it needs to be pulled, right? But just to give you an idea of where you're at. He will need to see financial documents, right? So he can tell you what you're approved for, how much down payment, all that stuff, right? But you don't necessarily, we have to talk to you about it, but we don't necessarily have to pull credit because I think that's what it is. I think people know, hey, my credit's like, in the balance, and then they're going to check it. It's going to mess it up more. You know what I mean? And I understand. That makes perfect sense. Yeah. We would advise against that. Like I said, if we know you're like right there or you're borderline, we're like, hey, let's not check it.
Yeah.
You see
Especially if you're not looking to buy at that moment.
Exactly.
There's no point of checking it if you're not trying to buy at the moment. Yeah. Like you mentioned, you can go onto your apps, and it gives you the list of things that you have on your credit, like things that are open, accounts open, collections, whatever it is. It will tell you. And as long as they're able to show show that to us, we could kind of give a rough idea of what to expect as far as numbers.
Right.
But like he said, if you're looking to buy something now and you want to, your credit's not where it needs to be. At the end of the day, pulling the credit, yes, it does. It's a hard inquiry and it does affect. But at the end of the day, our point is to help you get it better, right? So a hard inquiry and knowing what we need to work on to pay things off, or to even do a rapid rescore if you need to pay some debt down just to be able to rescore that and get a higher rate or higher points, then yes, it would be necessary at that point if we're looking to buy right away. Yeah. So yes, I would say that it just depends on the situation, what you're looking to do. If you're just interested in knowing what you're qualified for, and if your timeline's only for in the next 6 to 12 months, then pull your credit on your side, look at the report, and we'll be able to work off of that.
Yeah. And here's another thing with the inquiry, man. You guys, people gotta understand, if someone checked, right? Usually someone's checking because they're about to loan you money and you're about to take on some debt. Right. You see what I'm saying? So usually that's why, there's a hard inquiry. But let's say you do get a hard inquiry, right? Or a soft, whatever. The whole thing is, if you don't take on any debt behind that, right? That's going to come off 30, 60, 90 days, whatever your credit cycle, how that one's working for you. It's going to come off. And then, then your score will go to the same or, a little more, whatever. Yeah, because we had a client that the credit score was like 780 something. He was so worried. I think his score went down 4 points, I think he told me.
Right.
You know what I mean? And then 30 days later, boom, back to where he was. Like, it's, there's going to be a hit on your score, but it's temporarily because there's no debt behind it.
Right.
Yeah. And the credit bureaus allow you to, within the first 7 days, you could shop around, right? So you're able to shop around. You'll still report the same.
Is it you said a 7-day window?
It's a 7-day window. Yeah. It's what
I think somewhere I heard it was like 30 before. Did it change or something?
I've heard as high as 14.
Yeah.
I've always known that within the first 7 days.
I think it was. Yeah, I think I've heard 14.
Yeah, that's the most I've heard. So I'm not super on that. But I think the point that Alvin brings is crucial. If you know your credits, it's really good, right?
Yeah.
And you have the money, you're in position, let's say, right? You be honest with yourself. Shop around. And when you shop around, do it quick. Like, like have a strategy behind it. Yeah. Hey, I'm going to contact, these 2 loan officers or these realtors within the same time span, because that's the best. I guess the way it works is the credit bureaus understand what you're doing. Right. You're shopping around, like we're told to do in America, right? So they understand, okay, this guy had, 3 hard inquiries by 3 different mortgage companies, but it was all within 4 days. This guy's shopping for a mortgage. We get it. You know what I mean? So that's, when like I said, when that credit cycle, cycles again, that'll come right off because you didn't take on any debt.
Right.
You know what I mean? But that's the best way to do it. Yeah. Spread out don't spread out the inquiries. Yeah. You know what I mean? Trying to kind of, bring them down to a certain window.
Yeah,
right?
set aside a day, right?
Yeah.
Do that whole day. Go
dedicate the day. Yeah,
mortgage shopping.
Yeah, exactly.
Go talk to line up 5 different lenders.
Yeah. I mean, that's just the best way to get it done, in my opinion, for the credit purposes. But like I said, at the end of the day, it's temporary. It's gonna come off, people. There's no debt behind it.
Right.
It's gonna come off, right? Yeah. So,
guys, we were supposed to start this episode so differently, but we no, I like it. This is genuinely raw how we just started the conversation. So leading into what we wanted to talk to, we were talking off camera about what it looks like, breaking down the cost, right, of what it really is, what it looks like to buy a house, right? What does the monthly payment look like at this market interest rate, and how much money you have to bring to the table, right?
Got you.
With and without assistance.
Yeah.
And that's why we brought on Alvin again on today's episode to talk about, he's our good friend and our loan officer.
Yeah, one of our preferred lenders.
Lenders with Embrace Home Loans. And let's talk about it, right?
So apologies, we're starting out, we're learning. So eventually we want to be able to cast it on the screen for everybody to see. But for right now, we're gonna kind of talk it through and have patience. You know what I mean? Have patience with us. Yep. We're gonna kind of try to come up with scenarios and paint a picture for you on how it looks. So I would say, we've talked about the 20%. We know that, all right. But let's just say, regular FHA. And, maybe with an assistance, right? Yeah. Or conventional with an assistance, just not 20%, because we understand, look, You know, it's common sense. If you give 20%, it's going to be a lot cheaper. You know, so it's not really apples to apples, basically. You know what I mean? I think what people need to see is, hey, what would happen if I were to bring, you know, the minimum requirement for an FHA loan or a conventional loan, right? Which is either 3%, 3.5, right? Whatever the loan program is. And what would that look like if I don't have that and I use an assistance program?
Yeah,
I think that's what maybe we should compare it to today.
So. I think we could definitely hit on those points. And, well, first off, thank you guys for having me on again.
Yeah.
You know,
yes,
I appreciate the positive feedback from the last time, and I appreciate you guys having me on again.
Yeah, dude, you were killing it on online, man. People were making comments and stuff. They were like, "Hey, who's that? You know, who's that handsome fellow?
Who's the new guy?
Who's that handsome fellow?"
The people love Alvin.
Yeah, man. People like Alvin.
Yeah,
man.
I appreciate it, man.
Nah, that's what's up, bro. But yeah, so Alvin, so Embrace, you know, let's shout outs to Embrace, good plug for Embrace Home Loans, and Alvin Flores here. But you guys do have an excellent product, man. With a program with down payment assistance.
Yeah.
Talk to us a little more, man, and then I'm gonna go ahead while you're talking about it, telling us, you know, some of the pros. I'm gonna look for a house. We said Montgomery County, right?
Yeah.
And then you know, we'll start breaking down some numbers.
Yeah, man. So we offer through Embrace Home Loans. It's a product called it's through Wider Path Foundation. It's a nonprofit organization that is helping a lot of minority families be able to buy a house, right? So they provide a grant money that's up to $10,000, and you're able to use this with all types of loan programs. So the FHA, conventional, USDA, and VA. So all these loan programs are eligible to utilize this grant product that gives you up to $10,000, which is it's free money. It's not money you have to pay back, so it's not recorded as a second lien on the property, which a lot of other programs may be recorded as a second lien.
Yeah, that's good to know.
Yeah, I was going to say, let's pause right there. I was sorry to cut you off. So let's explain that, man, because not all money is free money. You see what I'm saying? Now, they will give it to you, right? But this is where I tell people, hey, just ask the questions. You know what I mean? Yeah, you're getting $10,000, but how? Prepayment penalties, you know, like, is it a second loan? Okay, does that second loan have payments? Does that second loan have interest? You know what I mean? How soon, you know, do you need to pay this off? Like, there's all kinds of programs, right? So that's where you need to be, I think, you know, cautious and pick the one that's right for you. Only because there's a payment on it. The payment might be $13, you know, $58, whatever it is, right? So I'm not saying that they're scary. I'm just saying find out, right, why you're getting this money and I guess, you know, what's attached with that, right?
Yeah. So I'll give examples, right? So with Embrace, the grant program, like I mentioned, it's free. So grant means free. There is no payment attached to it. There's no interest attached to it. You can, you know, you're literally Embrace is giving you this. Embrace and Wider Path Foundation is giving this to these families to buy their house without any repayment attached to it. You just have to qualify, of course. So the qualifications are very simple. Again, you can use all four of those loan products that I mentioned. And there are income limits to these programs, and they go based on household size. So even if a buyer is there's one buyer that's attached to the loan, if they're married and they have a household of four, so they're the buyer, the spouse, and two kids, you know, they'll take the combined household income for qualifications purposes, which is the case for most of these down payment assistance products as well. But with Embrace, the Wider Path Foundation grant, there is no repayment to it. Now, there are other programs that are out there that do have a repayment clause that's within them. Some of these, for example, you'll get them to provide you this grant money or this assistance, up front. So they'll give the assistance towards your down payment and closing costs the day of closing. But they have a note that you're signing the day of closing. That's the way it's usually set up is that it's deferred for 30 years. So that 30-year deferred loan is repaid usually in one of three ways. So either you refinance. So the moment you're refinancing, you're repaying or you're paying off, the first mortgage, and that makes you have to pay back the money that was provided to you for the down payment or closing costs. The second way would be if you've sold your house. Again, you're paying off your first mortgage. You have to pay back the second loan, which is the grant or assistance that they're giving you. Or the third way is that you've paid off your house, right? You're still living in it, but you're paying off your house, so you got to repay that off. So those are really the ways that, yes, they'll give you money up front, but there is a repayment clause attached to it. And that's one example. There's other examples of repayments, assistance programs that have repayment that you have to make within 5 years or 10 years at an interest rate. So there are different programs that are out there. It really just depends on which is the most beneficial to you. Yeah. I feel that the one that we offer through Embrace is the most beneficial because it's free. You don't pay back. There's no additional hits on rate just to be able to get the program. You just really have to qualify for as a first time buyer. That's
good. Just like Renee said, with whether it's Alvin that you talk to or a different mortgage lender, always find out the terms, right? Always find out the details, because that's what can kind of throw you off if you don't know. Like, and you find out last minute, hey, I got to pay this back. I thought it was free money.
Yeah.
Like Renee said, not all free money is free money.
Yeah.
You got to look at the fine print.
Yeah, man.
Yeah,
because let's say, hey, things happen in life, right? Circumstances change, right? Let's say you bought a house, you use one of these these down payment assistance loans, right? And let's say, hey, your life is taking a turn and your career is taking you to a different state, 2 years later, right? And you're like, hey, I got to sell this house. Right. You know what I mean? And then you go to sell the house and you find out, you did all the numbers, right? And you're like, okay, it's 2 years, so I understand I'm not going to make, a lot of money, but at least I'm walking away with something, right? But then you find out, hey, no, you got to pay those $10,000 back.
Yep.
You see what I'm saying? Oh, because you sold within the first 5 years. Mm-hmm. Oh man, I didn't account for that. It's costing you money now.
Yep.
You see what I'm saying? So it's like, you just look into it because you never know what you're signing. Basically, know what you're signing up for because life, man. You know what I mean?
Yeah.
Anything can happen. So.
All right. So were you able to pull up an example for us?
I got a good house. I mean,
all we're gonna use is the purchase price.
Right? Okay.
So and then Alvin is for the people.
How about if someone's like interested in looking up what we were talking about?
Yeah, we can give the address out.
We'll shout out the broker and the listing agent too.
Yeah.
Carlos like, no, we're not. So just
free process.
just for fun and giggles, shits and giggles or whatever. I don't know if I can say that.
Of course,
it's your podcast. You can say whatever you want.
13514 Grenoble Drive.
13514.
Yeah. So this is I would consider this, let's say in the Hispanic community, right? I mean, that's what I'm aiming for, right? This would be an area that
in Rockville.
In Rockville, that's desired. That people want to live here. Rockville's a nice place. This is like 20503 borders 20906, which is like Aspen Hill. Mm-hmm. So we actually helped the client buy on the street. Last year.
Okay.
And she bought for, I want to say $490.
Mm-hmm.
Wow.
And this is like the same house. And hers was probably a little better, but hey, times have changed, and now they want $550 for this one.
$550.
Yeah.
For the people that are home, listening, watching. Even though when this airs, I'll probably put the property up and show you guys. But if you guys want to look it up, like Renee said, it's 13514 Grenoble Drive in Rockville. So it's a
Cape Cod.
Yeah, it's a Cape Cod. Mm-hmm. 549. Let's say 550.
550.
It's 550. It's a 4-bed, 2-bath, 1,400 square feet.
Yeah.
Now let's be honest, right? Mm-hmm. People at home that know a little bit about real estate, they're gonna be like, $550,000 for a 4-bed, 2-bath, and not even 2,000 square feet.
Yeah, that's Montgomery County. And here's this. I mean, if you look it up, the median home price in Montgomery County is, I think it said a little over 600. You know what I mean? Or right around 600. Right. So this is even below the average.
Right.
Right. I just, like I said, let's pick an example. Right. And I feel like this is a decent example. 550. Look, I mean, are there homes that are cheaper than this in Montgomery County? Yes. Yeah. You'll find a cheaper home, but maybe no basement, right? Or it's just, even smaller than this. You know what I mean? So realistically right now, like, you want a decent home and, in a decent area. Decent square footage, right?
Yeah.
It's going to be, around this price in Montgomery County.
At the end of the day, it comes down to what your budget is, right? What your budget is and what area you want to live in.
Yeah.
And the location matters, right? Location is going to determine a lot of things, right? It's going to determine the price point that you're going to have to be at, right? Because we all know that Prince George's County is different from Montgomery County. Is different from Arundel County. Anne Arundel County.
Yeah, different from Howard County.
Different from Howard County. You know, so that's
different from Baltimore County.
Yeah, of course.
You know what I mean?
What 500,000 buys you in Anne Arundel or Rockville is not gonna be the same as in Baltimore or Prince George's.
Exactly. So it depends. I mean, like I said, I pulled it up because, you know, in my experience, when people talk about Montgomery County, you know, on the affordable side, right? Not the Chevy Chases and, you know, the Potomacs and things like that, right? On the affordable side, people, you know, Rockville, Silver Spring, right? So like I said, in my experience, this would be a good example of what someone would want, right? And here's where we're gonna break down payments and things like that, and let's see if you really want this house. You see what I'm saying?
And then we're gonna do one at 550, and then we're gonna switch over to a property in, let's say Prince George's, right? I'm a PG baby. I've lived in Prince George's all my life.
Yeah.
So you know.
PG's up though, man. That's what we were talking about.
Oh yeah,
PG's up, man.
It's on the come up.
It's on the come up, man.
PG's up, man. So it's not. That used to be, in my opinion, that used to be like, oh, I'll go to PG. I'll go to Bowie or Hyattsville, man. Yeah, you need this kind of money too.
Yeah,
you know what I'm saying?
Capitol Heights.
Man.
It's not.
PG's up, man.
Yeah.
So I mean, right now I'm steering people more like Anne Arundel County. Good schools, right? It's on the come up.
Yeah.
Very affordable. We were talking about this with Alvin. One point where Anne Arundel County absolutely kicks ass is taxes, property taxes.
Yeah.
I mean, look, the property. Let's look it up. The property taxes on this.
Yeah, you told me they were like $3,000, right?
Yeah, we saw homes like for like $3,000. You know what I mean? A year. Property taxes on this. This says 4460, but I don't know. I think once you buy this, I mean, you will get a new assessment on it. You know what I mean?
Probably, yeah. So yeah, I noticed that too. I looked it up.
I'm thinking this is more like 5,500.
Which one?
In Montgomery County?
This Grenoble one.
Oh, this one.
That's just me. That's just me. My opinion. What's on here on record though is 4460, which I believe those are really low taxes for this house. This is probably like the same owner for like the last 50 years, and
they need to be updated.
Yeah, it hasn't been a new assessment,
Yeah.
But yeah, so I don't know, Alvin. So the idea would be FHA versus the Embrace grant, right?
Yeah. So I have some numbers here for you. So as far as on the monthly side, right? Yeah. So I'm looking at the 549 price with 550.
And Alvin, not to cut you off, I'm sorry, but let's set this up, right? Let's give some context, like. What profile, like what kind of buyer is this? Meaning like, credit wise, right?
Okay.
Income wise, like, you know what I mean? Like what kind of buyer?
So, let's set up the scenario. So that's good. So this is an FHA loan. The FHA loan, anything above a 660. So let's say a 660 credit score, someone who's bringing in the minimum, which is 3.5% down. That this monthly payment would be for that type of buyer.
Okay.
First time buyer is what we're looking at.
Okay. And I'm gonna keep interrupting you. I'm sorry, man. Yep. So when you say 660, that's where you want it to be, and that's where the optimal would start.
Yeah.
You see what I'm saying? You'll start getting, a decent rate, like the person that has maybe a 680. Like you're in that range now.
And 660 is not a great
No,
score,
that's not
obviously.
even that's not even a high credit score.
So we're looking at 660 being like the bare minimum.
And let's build our minds.
Yeah.
You could do it with a lower credit score. You could do it. It's just going to be a little more expensive for you. So that's why Alvin's saying for this, 660 would be like, hey, you're going to start getting some respect now. You know what I mean? Mm-hmm. Below 660, you're gonna get a higher rate.
Could be a higher rate.
And it could be a higher rate, right? And it depends on income too, stability at the work and stuff like that. But people always remember, someone's letting you borrow money, and the way they're looking at it is risk factor.
Yeah.
Right?
How reliable?
How can I get my money back?
Right.
You see what I'm saying?
Exactly right.
Yeah. So the higher risk you are, the lower credit, the higher risk you are to me of me getting my money back. Right. Yeah. So I'm going to charge you a higher interest rate on that so I can make up for that risk. I can mitigate that risk.
Exactly.
Right? And that's how it works, people. It's not that they don't like you personally, you know what I mean, or whatever people are thinking, right?
Yep.
Yeah, man. It's just that's how it works. Your risk to the people that eventually, pony out the cash, your risk to them, right? And then they have a threshold for the level of risk.
Yep. And these are perfect scenarios too. So if someone is on that borderline as well, to kind of determine whether you're on the riskier side compared to the non-riskier side, that's where we would go in and kind of have that conversation. Talk about what's on your credit that can help you boost up your credit score. So that of course that's something that we could always look at if you're right at that border.
To take you out of like that danger zone.
Exactly. And to benefit from getting a better rate too.
Right. And I honestly think not to pat on the back, but I think that's what makes us different, right? Because we could just say like we don't have to tell you any of this stuff, and we could just say, hey, let's go get the house, man. You're approved, and your credit score is like at a 620, right? And you know what I mean. And they're kind of just pushing your financial.
They just kind of want to get you into the house.
Just get you into the house, right?
And those are the agents. Sorry for cutting you off. Those are the agents that are just out here that don't last, right?
And loan officers.
Yeah, and loan officers that are just out here just trying to get the commission. That's it.
Yeah,
right?
man. Yep.
But we all know that in this industry, people that work like that, they don't last, right? Because your reputation is everything in this business.
Yeah.
And if you keep doing that, it'll catch up with you.
Yeah, it's just it's the referral stuff. I mean, man, it's just like me as a professional. Like I take pride in being able to put them in a home for cheaper. You know what I'm saying? You too. You know what I mean? Like that's. I guess that. I mean, but I do want to point that out. Like, there's some people that are just they know that you don't know anything, right? Or you don't know much, right? Yeah. You don't do this for a living, so you don't know the ins and outs of it. So they're just gonna steamroll you. You see what I'm saying? But if you really if you sit down with people there are people that care. Right. And they want you to do it, in a better way. Right. So what's it to us for you to just hold off for 3 months? Hey, let's up this credit profile so you can get it at this pay. Hey, your payment here and your payment here is $200 difference. Let's save $200 a month for the next 30 years. You know what I mean?
Right. So, and that's why we started this podcast.
Yeah, man. That's the whole point.
To educate people.
Yeah.
And that's really important that he touches on that because like he said, it's sad, but we all know this, not just in real estate, but other aspects of life. People will take advantage of you if you don't know what you don't know.
Yep, yeah, exactly.
So that it does come down to that, right? So that's why it's important to, in whatever aspect, if you're going to go buy a car, educate yourself before you walk into that dealership.
Yep.
If you're gonna go take out a credit card, understand what it looks like to take out a credit card, what the terms are, how that affects your credit and all of that. So always educate yourself before you go into anything. And the home buying process isn't any different.
Especially the home buying process.
I always tell people, I'm like, look, if go on YouTube. Yeah. I go to YouTube University. I learn a lot on YouTube.
Yeah. Watch the People's Real Estate Podcast.
Yeah, and while you're there, subscribe. Like and subscribe. Back to what we were saying, right?
So let's how we get to it.
So I wanted to point out something that I just noticed on here because you guys are going to see it, anybody that's viewing. They have on here an estimated payment. Zillow, and I think I touched on this on the last.
Yeah, you did.
Yeah. So the estimated payment on there, they already put you with an estimated payment. Now these are factors that Zillow has already prefixed into their site. Now, if you go into the calculator or the way they're estimating this payment, they're putting a 20% down. So the one thing for the viewers is don't get fooled by what you see on these apps because they already have these preset calculators.
I got you. Right? That's like when I see the Mercedes commercial and they're like lease for $289,
right?
Or whatever, whatever.
Oh,
it is,
there's so many stipulations.
The Zillow calculations are for the people that have the 780 credit score, that have
800,
the 800 credit score, that have the 20% down payment.
Yeah.
We're talking the perfect ideal
candidate. Yeah.
And this is what they'll advertise, right? And so sometimes when people go on these sites, because this is available to anyone, they go on there and they see this price and they're like, oh, okay, this seems affordable. This seems something to my budget. But they're not factoring in these things. So obviously, when I'm gonna review these numbers, these are to the scenario we're talking about.
And then they get the outfit. No, eso muy caro. Es muy caro.
Yeah. For the people that are listening, right, that are watching, right, that don't have it pulled up, the estimated payment on this $550,000 house is $3,397 a month.
And are you able to manipulate this page, or is this just a screenshot? Yeah. Go down real quick to where the calculator side is. I just want to point that out. So I don't know if we could pull that up here real quick. Right there. You just passed it. All right. So
This one?
Yeah.
Oh, the breakdown. There we go. There's
All
the
right,
breakdown,
so I just wanted just to point out a couple things on here. So this says estimated monthly cost $33.97. It has the principal and interest, which is $28.15, mortgage insurance, which is $0, property taxes being $3.90, and homeowners insurance being $192. So one thing I just want to see if you could go down a little bit on there, and see if we're able to open up the calculator at all.
Enter your information.
No, not there actually. Go up a little bit. I just above the payment. Let me see if it shows on there.
I think you're going too fast.
What are we looking for? A calculator?
Yeah, the calculator usually have it on there. I don't know why.
Don't see.
See if you're able to click into the fields where the
How about
payment
right there?
is. No, because this is down payment information.
Maybe let me see. Go down. Nope.
No, they're probably
It's usually right there by the financial
So
side.
yeah, and really what I wanted to do with that part is just to show you what their expectation of the payment is, right? So they're factoring in the 20% and things like that. So but anyways, we'll go into the details of what the more typical buyer would.
Yeah.
Right. So the typical buyer buying this house at the 549, we're looking at a payment of $4,208. Right. This is the payment for that person putting 3.5% down, a 660 credit score or better, and a rate right now with today's rate at a 6.75. Right. So that payment is going to be made up of a couple things. The payment is going to be made up of, first off, the principal and the interest. Principal and interest is basically what you're making the payment back to the bank. They let you borrow it, you're paying them back on the principal amount that they let you borrow plus interest, right? So that's going to be $3,502. The next thing would be the escrows. So the escrows are made up of a couple things. First off, it's made up of your homeowner's insurance, which in this case I have the homeowner's insurance of about $91.67, and the real estate taxes, which we pulled up from the Montgomery County website, which is $371.67. So that's being pulled directly from the county public records. Then additionally, you're paying a mortgage insurance payment. And we talked about this on the last one. If you're putting less than 20% down, you're subject to paying a mortgage insurance payment. So in this case, because we're putting the minimum down, the payment's going to be for $242, which is all just lumped summed into one payment that you're making to the bank every month. And that's going to be for $4,208. So that's your mortgage payment that you would make on a monthly basis. Now, the great thing about this payment is that it's on a fixed rate. So that means that it does not change. Your principal and interest does not change for the 30 years of the loan. So that's a huge benefit because you're not going to be worried about, oh, is my payment going to change? Is it going to go higher if anything changes? No, the market can change all it wants, and your payment is going to be fixed. Now, if it changes for the better, then that's when we were talking about refinancing and being able to benefit on that lower rate. But just to kind of give the example, that's what we're looking at, about 4208.
Yeah,
4208. There you go.
Okay.
So that's them coming with their own down payment.
That's them coming with their 3.5%.
3.5%. So let's calculate that.
closing
Let's tell them what that is, man.
Yep. So
That's what I wanted to do today. Let's talk from real numbers. Everybody just says, hey, this, that. Let's talk numbers, man.
Yeah. So the 549, we're looking at a 3.5% down payment. So that total amount is.
I got it at. I put it at 550. It's a 19,250. So 19,000. Let's say.
Okay. Yeah. 19,250. It's odd numbers because it's the 249.
Yeah, just say 19,000. Let's call it 19,000.
We'll say 19,000.
Right, yeah.
So that's your down payment.
That's your down payment.
Your minimum that you're putting towards this purchase. Now, aside from the down payment, you have closing costs, right? So I average about maybe 4% on what that purchase
That's fair.
would be. So we will go with
another 22K.
Let's say 550 again times that 4%.
You're gonna be at 22K.
So yeah, 22K. Yeah. So we got $22,000 of closing costs plus the $19,000 of down payment. So realistically, a person going in with just with no assistance,
You need like 41K.
Yep.
Like
So
40, 41, 42K, you know.
so
To buy this house, people.
41,000.
550,000 this house, okay? Because it could be a little lower for another house for 550,000. The taxes could be lower.
Right.
Yeah.
Exactly.
It could be higher. You see what I'm saying? It could be higher. So taxes is the one thing though that throws people off, and they're like, especially in the last couple of years with prices going up. I've had clients call me, Renee, you said the payment wasn't going to change. I said the interest rate, and you know it's not going to change. But look, your taxes going up is a good thing. That means value is going up. You know what I mean? So yeah, that will, but it's not drastic, people. I mean, we're talking about maybe it depends where you are, but 10, 20, bucks or something like that.
Right.
Yeah.
If you're but I know it sucks to pay more money, but that's a good thing. You're paying it for a good reason.
Right.
You're right. But that would be the only one I can think of that would make your payment go up, even being on a fixed rate.
Yeah.
But that has nothing to do with the rate. That's just taxes where you live.
Exactly, because your principal and interest being fixed means that it doesn't change.
It doesn't change,
right?
and it
So
won't.
That's the beauty of it, that you're never going to pay more to the bank. You're just making more of a payment to the county, because the county is charging more in taxes.
Yeah.
So that's where that money is going.
And that settlement, well, you can provide it to them at any time, but usually you're going to get what's called the amortization schedule.
Correct.
Right, and that's if you do the math, it's 360 payments, right? 12 payments over 30 years, right? And it'll have it there, and it's already all mapped out for the buyer.
Correct.
Right? It mapped out payment by payment, how much is actually going to pay off the loan and how much is actually going to the bank.
Exactly.
Right? And you can always ask, right? I could always ask a lender, hey, can I have the amortization?
Absolutely.
Yeah.
Absolutely. Yeah. Typically, a good loan officer will give this to you during the loan disclosure process.
There you
Your
go.
loan disclosures will show all of this information. Yeah. But yes, that is something that you're supposed to receive when you're in the purchase of a house.
Yeah.
So, yeah.
And it's good. And it's good to have an amortization.
Mm-hmm.
It's a big word.
It's a big word.
I know that our broker Matt taught us about that. And the good thing about that is a tool, because it gives you an idea of
Yes, you can plan ahead.
Yeah, of how much you're paying down the interest and the principal and the equity that you're building over time.
You can literally track it. Like
you can literally track it, right? And that's that's one of the a big benefit of owning a home, right? You're paying down this big debt, but you're also building equity, and that's aside from your property going up in value year after year.
The tax benefits.
The tax benefits. These are all things that you don't get. Like we say this time and time again. You don't get when you rent. No, you don't. It's why we wanted to keep bringing these topics up, right, and have Alvin on, because he's the lender, he's the one that does the numbers. So this is to give the people an idea of what it looks like.
Yeah. So 550, we're at what, 42K?
41,000.
Right. So that's the raw number, people. Right. So this is what I like, right? Now I'm looking at this client. I'm like, okay, 42,000, right? Now it's up to us. And sometimes we can put it together, sometimes we can't. Right? Now it's to us, right? Let's say, Alvin, this person was to say, hey, look, guys, man, I really want a house like that. But I'll be honest with you guys, man, it's taken me almost 5 years to save this, let's say, 30,000 that I have. I don't have the 42,000, right? All right, this is where we go to work for you and find you money, like Alvin said on the last podcast, right? And this is, we actually told a client this yesterday, right? This is how we operate, or how I operate. Is that now that I know, and you tell me a little bit more about the situation, my wheels start turning, right? And I use my knowledge and experience to make this deal happen. Because if not, I'll be honest, if I don't make the deal happen, you're not happy. And if you're not happy, I'm not getting paid. Right. And that's how it works, man. So 42,000. So out of that 42,000, remember we said about 19,000 down payment, about maybe 22,000 closing costs, something like that, where it puts us anywhere from like 40 to 42,000, right? That's the raw number, right? This person's telling us, man, I only got 30,000 though, guys. So let me take another 2 years to save up another 12,000. No, stop right there. Now that we know this, let us go to work. All right. Tell them about Embrace and right here how the grant would work here.
So this is the perfect opportunity for that first time home buyer going into this purchase, that Embrace will help them with $10,000 in a grant. And this is, again, free money. Money
go,
that
people.
they do not have to pay back. So this now $41,000 total that they thought they were going to pay, the grant money Embrace with through Wider Path will give them the $10,000 at closing. So that way they reduce their overall expense for this purchase by $10,000. So instead of it being $41,000, it will now be $31,000. So now it becomes more affordable. That's $10,000 less than you have to put up. And it's, and if you only have that $30,000 to $32,000 savings, then that fits your budget. That now becomes more realistic for you.
Okay, so we're at how much now? We're at what, 32? Like let's say 42 to 30.
I said
like
31.
30,
Yeah,
like
I said,
31.
Yeah, I said 30, 31.
So the buyer's still short. You see what I'm saying? All right, let's do this. Let's look at this property, right? Hey, look, in my opinion, not to toot my horn, but if I would have listed this at a more reasonable price, where I think it should be. Actually, okay, they just dropped it. So
Yeah,
on the
it's already
28th,
at a price cut.
So right there it is. So right now you'll see in the next 2 weeks this goes under contract, right? So here's the thing, a good agent. I'm gonna look at this. I know the area. I know the comps. I know what the properties are trading there per square footage wise, right? So I look at this and I'm like, we can beat them up. Right? We can either give them the price they want and ask for massive help, right? But that's not going to help. That's going to put up your price. You see what I'm saying? So what we could do is, like I said, I would have offered around here, right? Where they were at 580. I would advise you to offer right around 550 because I think that's the more realistic price for this area, right? And then here's the thing. I see that this is on the market 21 days. Houses that are priced right in this area don't last 21 days. You see what I'm saying?
Especially with this shorter supply.
Yeah, exactly, man. So this is where I go in and, I make my case to this person like, hey, look, nobody's giving you this, all right? Nobody's offering. That's why you're still here, right? This is what we can give you. This is we're going to make a good offer, though. You can't go lowballing, right? You got to make a good offer based on numbers, man. Comps. How did the other units in the area trade? What square footage were they? What did you pay per square foot, right? Because that's what the appraiser is going to come and look at.
Right.
The appraiser's not going to come and look at, this is the color is so beautiful here. No, he doesn't care about the paint color and the stainless steel appliances. They don't. That's not a big factor.
Right.
Right. Square footage. Right. Condition, you know what I mean? So that's how they're going to look at it. So that's how a professional like me is going to look at it. I'm going to look at it from a number standpoint, and I'm going to give you, hey, this is how we can package an offer. Now, obviously, it's up to you what you want to do. But here, I would say, hey, let's give them, they just had a price cut, right? Strategy-wise, they just had a price cut. This is probably the honest price they wanted for this house.
Right.
They were just testing the market.
Yeah.
Low inventory. Makes perfect sense, right? This is what I even told a client this yesterday. I always give them this example. It's like, and I'm like, look, if you were to sell a car and you wanted to net $7,000 from this sale, what are you going to price it at? Are you going to price it at $7,000? No, right? There's always room for negotiation, okay?
Yeah.
So this house right now, it's like there for the taking. And right now, if there's no other competition, I could say, hey, give us 3%. Give my buyer 3% closing help. They'll give you the price. You just dropped it too, so they'll give you full price.
Yep.
You give them 3% closing help. We can get this deal done in 30 days or less, 21 days with like Alvin. All right. So what would that be if we could negotiate 3% for them, right?
Getting 3%
550
on that 550.
Yeah, so 3%, 1650. Oh no, that can't be right? Oh yeah, 1650.
Yep.
Yeah, 1650. All right, let's say that's a big number, right? They just price cut. That's probably not going to happen. Let's be honest, right?
Like a 2%,
Yeah,
1%.
let's get them 1.5%. Let's get them half of like the normal right now. 8250. Let's get them that. All right, 1.5. Let's say I was able to negotiate 1.5% closing help for you. Now you have another 8250, right, of money of credit coming back to you.
So now you're now at 22 to 23,000.
We just found you $20,000. You see what I'm saying? Almost $20,000. Now this is affordable. Now this person actually has a little money left over. Maybe we could buy down the rate.
Yep, we could buy.
You see what I'm saying? What would that look like?
So now let's say we're able to. What they have about $8,000 that they're paying with.
About 8,000. Let's say. Yeah,
so now you
there.
buy down the rate. Let's say you buy 1 point. Let's do this here.
And you won't get this anywhere.
Hell no.
Anywhere else. People don't talk about this.
Hell
right?
no.
I
hope you're following us. Literally, while he works on a little recap, we started with $42,000 to buy this house, right?
Yeah.
We paired you up with Alvin. He found you $10,000 because you're a first-time home buyer, right? You're at $32,000, right? I went over there, assessed the situation. We're making a strong offer. I found you another $8,000. All right, that put us where? I think we were like at 26,000, something like that.
What was that
to buy the house right now? 26,000.
And it was
with
20,
with the it was like 23,000 with the seller credit and
Okay, like around 23,000.
about 23,000.
There you go, man. 23,000 to buy this house now from 42,000, right? Because we gave you some good information and we're looking out for you, right?
Almost half.
That's the idea. That's the idea, bro. And here's the thing: you already had budgeted this money, this 30,000 to buy this house, right? You could still use some of it now, like he's about to show you, to even better your situation. Like,
Yeah.
you know what I mean? You can put that back into the house.
Yeah.
You can keep it as reserves.
Yeah.
You know what I mean? For your payments, right? Or you could use it to buy you if you were saving it for this purpose anyway, dump it back into the into the rate so you can get a better payment. You see what I'm saying? And this is how we would navigate usually. And then, this is I'll be honest with you, this is like, everything working out and things like that. Real estate's not always like that, but that's what we aim for, right? And when we do find a situation like this, the client, they like the house, and it's it's within their approved amount, and it's affordable to them.
Right.
This is where we go in and try to find the right ones. You know what I mean?
Yeah. And we could also, I know we're kind of short on time. And we could also do because I know people at home are gonna say, hey, but I can't afford a $550,000 home.
Yeah.
I want to do an example for somebody that's in the, let's say, 400,000.
Okay.
Right.
We could do. Yeah. You gotta go.
No.
Let's go long today.
Yeah.
Unless Alan's gotta go.
Nope, good.
all right, we're good. So
let's
we
go
can
long,
do that
man.
too.
Let's go long today, man.
That way we give people an idea, right?
Yeah. Because this is what I'm saying. It depends. Like, you want to live in Montgomery County. These are the numbers,
Right,
You know what I'm
yeah.
saying? These are the numbers, right?
Like we've said, it all depends. Your price point is going to be determined by your location,
Yeah.
and the condition of the home, and also other factors too, what the market looks like, stuff like that. But you can, if you want to buy something that makes sense for you.
Yeah, exactly. I want to live in Bethesda,
Right? But
you know what I mean?
Like you said, but can I afford to live in Bethesda?
And
No.
even if you can afford it, is that the smartest thing to
Yeah.
do with your money? You see what I'm saying?
course.
And that comes down to you, lifestyle, personal experience,
Yeah.
whatever you want. So.
But for a first time home, for a first meet, right?
Yeah.
Being a first time home buyer, right? I want to, my plan is to buy something that I can, and this is where we can get into strategies that we talk briefly while Alvin runs number is like, I've told you, right? House hacking. House hacking for me is what makes sense for me.
It's a beautiful start.
Yeah, if that's it. House hacking, for people who don't know, is when you buy a property, right, and you live in one of you can either buy a multifamily, which not a lot of people know this. You can buy a multifamily with 3.5% down.
Yes.
You live in one side, rent out the other.
Repeat that, bro. Repeat that.
You can buy a multifamily property, live on one side, rent out the other. It's gonna offset your monthly mortgage payment.
Yeah.
So let's say you buy a multifamily, you rent out one side, and your mortgage payment is, let's say, $2,800 a month, right? You rent out one of the units, and it cuts your mortgage payment by, let's say, 80%. Let's say it's covering $1,800 of your mortgage payment. You're only paying $1,000. Somebody else is helping you pay down your mortgage.
It's beautiful, man.
And then you're able to move out a year later.
Is it only multifamily though? I mean, we can house hack a single family home.
Yeah, you can house hack a single family home.
A townhouse.
A townhouse, yeah, of course. If it
man.
makes sense, right? It all depends on how comfortable somebody is, right? Because like I've talked to people about this strategy, but they're like, hey, I like my privacy. Right? I don't really want to, I want to own something and to myself, right? Okay, cool. So this is where you got to be at. But for that person, right, that understand, they understand,
they
right?
Want to hack the system.
They want to get in it for as little money as possible and try to, leverage the real estate the correct way.
Yeah.
Hey, you rent out the space. You can either rent it by the room or rent out, if you have a basement, rent out the basement.
I think, Carlos, this comes to the mentality, and I see this a lot in Hispanic people, right?
Yeah.
I don't know about how other. I guess the average American looks at it the same way, also, where it's like it's this permanent feeling with real estate. Like, hey, I'm buying this and I'm gonna stay there forever. No, you're not, buddy. No, ma'am. No, you're not, ma'am. Like, statistically, people either refinance or sell or rent, within the 5 to 7 years of owning the home, right? And that's because, like I said, life throws different things at you. Maybe you personally just outgrew the house, right? You outgrew the neighborhood, whatever it is, right? But usually you're probably not going to stay there for 30 years, people. You know what I mean? So that's why sometimes I don't understand why people look at real. I mean, I get it. I mean, to me, this is what I do. Real estate is just a commodity, that can be traded. I get it. To other people, this is the house where I'm going to live in. So I guess there's that side of it. But I honestly believe there should almost always be an investment, mentality in real estate too. Yes, I get that you might want to overpay a little bit for that perfect kitchen, and I get that, but there is an element of investing, in real estate too. So
I think people should have two mentalities when they look at a home, right? They should look at it like the place that they love, they live in,
of course.
Okay, but at the same time, it's an investment,
yes.
Right? When the time is right, I'm going to leverage that. I'm either going to refinance, pull out some cash, get something nicer, or if it makes sense, sell it and buy me something better.
Yeah.
Or rent it. Right? Exactly. So there's many ways you can look at it, right? And like you said, a lot of people go into it looking like this is my forever home.
Yeah. And there are some people buying their forever home.
But for the first time, first time home buyers, that's not
statistically, that's it's a rarity if you stay in this house 30 years.
Your first home is, I look at it as the stepping stone to something bigger, something greater, exactly. Right? It's because you're getting into something that you can afford. It's just kind of a sacrifice, right? Mm-hmm. It's not many people that walk into their forever home for the first time.
Yeah, it's very rare. Yeah,
very rare.
Yeah.
So I have numbers for you guys.
Okay, awesome.
So we're looking at just to kind of
let's recap it. Yeah,
recap our previous situation, right? 550 being the price, 42. It was 4208 for the monthly payment, putting the minimum down at the 6.75 rate, with the down payment assistance being $10,000 and the $8,250 that we're getting in from the seller. Mm-hmm. Exactly. So that was our previous scenario. You were coming to the table with $23,000.
Yeah.
Right. So now what we're doing is buying points, and points, just to kind of remind everybody, is basically in this scenario we're paying 1 point, which is 1% of the loan. So just to kind of give an example, we're basically about to pay $5,300 for a point. Yeah. And that helps reduce your interest rate from the 6.75 that we had to now a 6.125.
There we go.
So now we're reducing our rate. And now the way that helps is that we're now obviously saving on the monthly. Mm-hmm. So that savings will be now a total, or that monthly payment will now be a total of $3,985.
There we go.
Compared to what we were at the 4208.
Yep. And that's how we get you the house. If you tell me, hey, look, my budget's $4,000, a month, right? Yep. And I got $30,000. And so it's up to us to put it together now. And we'll let you know, look, that's not going to work, buddy. Like, no matter how good I am or how good Alvin is, that's just not going to work, right?
Yeah.
But that's what I'm saying. There we go. So payment ended up. Okay, so this person, let's do the scenario again. So they started with $42,000 they needed to buy the house.
Correct.
And the payment was $4,200.
$4,200.
Right? All right. And then we went and used our resources, our knowledge and expertise, and we're saying, hey, we could do better than that. Yep. And we got it down to now
$39.85.
Okay, that's the payment.
That's the
payment. All right, so we saved them about $300 a month. Right. And how much do they? Is that using up the whole $8,000 that was left?
No, actually not. So
you got about
what we used $5,300. So we still have about
like
3,000 left. So that 3,000 now plus the 10,000 that you're getting from the bank. Now it's about 13,000. Mm-hmm. So now you're still under your mark. What, 30,000?
Yeah.
So about maybe 28,000 is what you're coming to the table with.
So we got you there, and we got you a lower payment. We got you the house you wanted. You see what I'm saying? So this is what I'm talking about. These are the insides, the ins and outs of a deal. And then are people, okay, that's the thing. Are people, are they inclined to do all this for you? I'll be honest, probably not. Yeah. You know what I mean? Like probably not. They're not. If you give them, it's like I saw Homer Simpson, right? I saw an episode of The Simpsons where Homer asked the car salesman, is this car $6,000? And the salesman went, it is now. You know what I'm saying? Because that's kind of what you're doing. Like you're saying, hey, this is what I have to work with, and let's just go forward, right? So if you don't have someone that says, hey, no, hold on, we could do better than that, right? And then, because it's actually, this is a little harder. You know what I mean? Doing more work for you, basically, to better your situation. But honestly, we're making the same money whether we help you a little extra or not.
Yeah.
You see what I'm saying? That's facts. I'm sorry, that's just what it is. So that's what I'm saying, man. When you align with people, make sure they're looking out for you. Make sure they're really have your best interest at heart.
Yeah.
They really listen to you and are putting you in the right situation, financially and just for the right house that you were asking them for and things like that. But yeah, man, I think that's a tremendous example, bro.
Yeah.
They saved some of the money they were coming in with, right? And they actually got to lower the payment.
Yep.
You see what I'm saying? And put a little money. Maybe you gotta paint the house or something. Now you got the money to do it or whatever. Or
100%.
you want to have 1 month's reserve. You just never know what's about to happen. You can put that away. You know what I mean?
Yeah.
So there you go. I mean, what do you guys think? I think that was a good example how we can find a house, right? And come in and use our resources to actually make it happen. Because if I just say, and I think this is what happens, hey, look, nah, man, you need another 12,000. You need to go find another 12,000.
They're gonna go find another.
Go find another 12,000, and that's the payment. I can't do anything better for you. You see what I'm saying?
Yeah.
Like, nah, depending on who you talk to, they might be able to do a little better for you.
Yeah. And this goes for any scenario, right? Any price point, it just depends on your situation, right? Just because we did these numbers for a $550,000 home, we can do the same, find you the same resources.
You got
at
it.
whatever price point it is, right?
Hey, let's do it again.
It just comes down to, you being upfront and honest with your agent and your lender, right?
Yep.
Telling them, hey, look, just because I have the 20%, is there a way that we can use less money?
Yeah, you don't have to use all of it. That's the beauty of it.
There you go.
Yeah.
Let's find another. So you wanted to go to Prince George's. I in my opinion, it's kind of right there with pricing. I was going to suggest maybe Anne Arundel County, or you want me to do Prince George's?
That doesn't matter.
Your call.
No, it doesn't matter.
All right, my call. I'm going to go to Anne Arundel then. I just feel like that's a pretty affordable area right now, man. Good, decent schools. It's on the come up. Let me find this. What's a good solid price point right now? 350. Let's say a couple that both of them are making around 35,000-40,000 each.
Okay.
Right. 350.
So-
What do you think they're
so
gonna
let's
be?
say- let's say-
Más o menos.
To get something decent,
Yeah, let's say 350.
right now, I'd take probably like 360, 370.
I'm in Anne Arundel County, bro. So well, we talked about depends where in Anne Arundel County, right?
County wise, I feel like you could probably find something at 350.
I mean, let's do 375 to be more realistic.
Okay.
375. So but I'm saying that's like what kind of buyers are those, or buyer like?
Let's say
60,000.
Let's say a couple 50,000 each that they're making.
Okay, so $100,000 each.
100,000.
Okay.
Or not 100,000 each, but
I'm sorry.
together,
Together, household. Yeah.
Combined. They're gonna be like, "Oh, I don't make that."
Well, that's what I'm saying. Okay, so what's more realistic though? Are we seeing more people? I think that's 40,000 each. Let's say
like 40,000,
about
like
80?
80 household
Let's do
income,
that.
like 80, 90 is
Okay.
Yeah, start plugging that in. I would say, let me try to find a house for us. Hold on. Or I don't know if Carlos wants to look for a house. Odinson, that's a nice area. Yeah, but that's not a nice house. Let's see. All right, Pasadena, that's a nice area.
yeah.
All right, man, this is a good. All right, let's be realistic. This is a good starter home. All right, let's go.
This too.
Which one are you looking at, bro? Oh yeah, that's the one we were showing the client yesterday, Alvin.
Oh really?
Yeah,
Oh, yeah?
Yeah, she loved it
Oh,
because her
for
whole
sure,
thing
bro.
was like, where she, it depends on your experience, right? But she made it seem like, bro, there's no way you're finding houses for 350,000. Like, where are these houses? And I'm like, look, once you get outside of Montgomery County and Prince George's County, yeah, you can start finding affordable places, nice places to live in Maryland, man. And here's the thing, if you put this in Google Maps, this is 30 minutes from DC. You know what I mean? It's not like you're far out there. You know what I'm saying?
You just got to drive a little.
Yeah. So let's do that one. Let's do that one because it's 350. It's still on. Is it new on the market, Carlos? Or has it been a couple? Has it been a couple days?
I'm about to see. 15 days on market.
Okay. I mean, out there, it's.
It's not. It's relatively new, but
it's on point.
I'd say the example we're using 40,000 on each side with let's say even if it's just a little debt here and there, a couple credit cards, and maybe even a car payment.
They could pull off.
They could pull off a 375 is what I'm looking at.
Are we gonna do this? We'll do this exact house.
Yeah, we can do.
So
This.
let's do
350 on the dot. So.
Yeah, let's do 350 because there's a house. I mean, there's an example right there.
Yeah. So 350 on the dot. We're looking.
Yeah, let's break down this house. What is that, nursery?
Yeah, Nursery Road.
This is right where I was looking for. Let me see. Is that?
How do you say that? Linthicum?
Yeah, Linthicum. Yep. Carlos was like, I have no idea where
That's near BWI.
Yeah.
See, my area of expertise is PG at Silver Spring a little bit now, but like Anne Arundel, not that familiar.
I hear.
Man,
I
I mean,
that's further.
imagine being near an airport, man. You don't have to travel far.
Yeah.
Hey, you plan your vacations. And you got BWI right next.
If it's close to BWI, I mean good rental property.
Oh yeah,
right out
yeah.
there. Airbnb.
Good rental potential.
Yes, sir.
Yeah, that's what that's what I was bringing up to the client yesterday. She's looking for like a home to rent, to rent out. All right, let me see. Yeah, there's a 24 Eleanor. That's the house I was looking for. For a good rehab, but they don't want to come down to that price, man. They're at 197.
Oof.
They don't want to come down, man.
House looks nice though.
I need that around 140, 150. Yeah, the nursery house. She was loving it yesterday. She couldn't believe that you could buy a house that in this condition, this size for 350.
And it looks like they just cut the price not too long ago.
Again?
Yeah.
That looks nice.
Yeah.
Yeah, 4.2. Almost 1,000 square foot a floor. It's
a good home for somebody,
starting out, man.
Yeah, of course. Yeah, my older brother started with a 2-1.
Yeah.
Less than 1,000 square foot home.
He's got to start.
Yeah, and now he lives in a over 3,000 square.
There you go.
Hey, man.
You got to start. See, that's what I'm saying,
Two-car
man.
garage.
I'm like, have people never played Monopoly? Like, you just don't start with the big houses and the nice
you don't start with
properties.
Park Place.
Yeah, exactly. you got to build up, man. You got to build it out. And that's usually how property works, man. Yeah, so, Alvin, they went down on the 23rd. They went down from 360 to 350.
Okay. And how long has it been on the market?
15 days.
We're at I'm showing 16. Same difference.
Over 2,000 people have viewed this.
Oh yeah, I can see. I mean, it looks like an attractive home. And this is why we always have to go see it, right? This, why is it still there? Is it, are people failing, and getting financing? Is it,
Sold as is.
Yeah, it looks decent to me. All right. So same thing, built in 1952. I'm sure the other one's like 50s, 60s in Rockwood, but that was a brick. This is just like siding. It's a 4.2.
Yeah, Rambler.
Yeah, and this is what we were talking about here. The taxes on this.
What are the taxes on it?
3176.
3176.
Yeah. Whew. That's nice.
It's not 5,000 for sure.
All right, whoever is viewing and want to keep up with us, 207 Nursery Road in Linthicum, Maryland. 350,000 has been in the market about a little over 2 weeks. Another situation where we can go in there and ask for a little help. Nobody else is buying it, and if we like it, we can go in there and negotiate.
This is at a price point of 350, and if you were to put down 3.5%, you're looking
at
at
10 grand.
I think it's like 12.
It's 12.
12 to
Yeah, 12.
Yeah, 12,250.
All right.
12,250 as a down payment, right?
Mm-hmm.
And let's say Alvin said another 4% for
Closing costs.
Yeah,
on average.
You're talking about another 12,250.
So you need about 24 to 25K to buy this house.
Without any help, right?
Yeah, this is just what you need. Raw
Without
numbers.
any help.
We'll start off with that baseline first.
Yeah,
So
this is what everybody, most of the time where you go to a lender or you go to a realtor, this is what they're going to talk about. right? Not anything else, just basic, like, you know what I mean?
Yeah.
Raw, this is what it is, you know what I mean?
Yeah.
And that's what they're gonna expect you to to have and stuff like that, you know what I'm saying?
So just based off those numbers, that's when people can get an idea of like, hey, okay, I got that.
Yeah.
You know, worst scenario is like, okay, I have to, I don't get any help, you know, but I have the $25,000 I need to bring to the table.
We'll see. I mean, we'll see how much. Oh, you know, yeah, you're right.
Yeah, you know, but if we were to, most likely, we'll be able to get you help. You know, it's less than that, so it's going to be a plus, right? That's what people have to think about. Like, you know, as a first-time home buyer, there's so many resources available to you. You know,
yeah.
All right.
So yeah, go ahead. Go ahead.
Just to kind of give numbers of what I got so far.
All right.
So I'm looking at. So we're starting off with the main price, which is $350. The monthly payment that I have on here is $2,730.
Okay. 2730.
$2,730. So that again includes the principal and interest, the homeowner's insurance and taxes, which is
This is a real number. It's not like what you see on the Zillows and
exactly,
you know, where they're going to be missing a little detail here and there
exactly
to make it
this
attractive.
Is you putting in the minimum, right?
Yeah.
So and then of course the mortgage insurance. All of that is included within the payment to get you to that $2,730.
Gotcha.
Right. So estimated closing costs with the down payment included were roughly around like $26,000.
Okay, so there's a little more than 4% for this one. So this is what I'm trying to tell people. That right there, that's what everybody can do for you, and that's what most people are going to do for you. You walk in, they're going to pull your credit, check your finances. They're going to say, "This is what you need. You need $26,000 to buy this house, and it's going to be $2,730, a month. Have a nice day." You see what I'm saying? And that's it. You know what I mean? Most, like I said, most. Right. All right. And then if they say, "Hey, I'll get you this down payment program," all right, they're gonna give it to you, but then they're not telling you, okay, what comes with this down payment program. This is what we're trying to tell you, people, right? So this is where I think we differentiate ourselves, right? Because we're going to listen to you, understand what you're trying to accomplish, right? And then work within your budget. If not, even, beat out your budget. Like try to get you under your budget. You know what I mean?
Right.
So in this scenario, let's do the same thing. Let's get them the 10 grand from Embrace.
Yep. So we'll get to the 10 grand. So we're looking at 16,000 at this point.
Okay. So it works. If they just get the 10 grand, Alvin? It's up to 10 grand. That's what it is.
Yeah, correct. So in this particular case, it's 2.5%, right?
Okay.
So it's 2.5% of the purchase price.
Okay.
Up to 10,000.
Up to 2,000. Right? So what is that?
So
what's 2.5?
8,750.
Okay. 8,750. Okay.
Right. So we're looking at 8,750 minus that 26,000. So we would be left at 17,250.
17,250. Right. Let's just say, hey, we hit a home run on this one. We can get them 3% on this one, right? The seller just needs to get rid of this house right now, and they're just willing to give you 3% of the purchase price in closing help to you, right?
So you're looking at 10,500.
10,500. Okay, great.
So let's say we were to be able to get you're looking at what 7,000.
So here key detail right now. So one thing is that yes, you could get grants, you can get seller help, but the loan itself, you'll have to put always the minimum. But because you have extra cash, you can use that to lower your rate.
Lower your rate. People complain about the rates, right? That's how we beat it. That's how we beat it, people.
So you'll still have to come to the table with your minimum down payment, which is the $12,250. That's always going to be the minimum that you have to bring. But that extra cash that you now have from the seller, if you're getting the 10,000, what was it, 10,050?
Yeah, 10,500.
So you're now putting whatever's the remainder towards the seller cost. Oh, I'm sorry, the closing cost. And let's say you have, what is that? $5,000 that we would have left over.
I got lost. I'll be honest. Right. I'll be honest, man. I got lost.
So
but
let's do this.
We started with 26,000, right? That's what this person needed.
Right. So let's do that. 26,000 minus the 8,750.
All right.
We'll get in the grant, and then minus
10. What was 3% seller help?
So let's see, 12,200.
You do it to 350 times 3%.
So we would be putting 5,000. We would be putting $5,000 towards the remaining amount, just so that we're left with the down payment, the 12,250. So we have another 5,000 that we could play with, right? So now we have more than 1 point that we can purchase towards the rate. So if we were to do that, I mean,
hold on, just to double check on the math. I'm not far off, but we started at 26,000, right? We get $8,750 from Embrace.
Right.
We get $10,500 from the seller.
Closing costs. Yeah.
So, why am I at $6,750?
Okay. So remember
He has to bring. They have to bring down the
bank has
minimum.
to bring 12,250, which is the minimum down payment on 350. So what I did differently was I took whatever that $17,250 was minus the 12,250, which is $5,000. That would be the portion that I would use from the seller credit towards the purchase. Right?
Got you.
Right?
Okay, I'm following.
And then now we have a remainder of the $500 for the $5,000. That $5,000 is what we are going to use towards the points. Right.
Let's go.
So if we could do that and just bear with me, I'll go ahead and I'll pull those numbers here real quick.
Let's go. I love it.
This is good for people can get an idea. You know, a lot of people don't know that you can buy down the rate.
Yeah.
That you can buy points.
Yeah.
You know, so this is good information for if you guys are enjoying. If you stuck around, shout out to you. You're gaining a lot of information.
No, facts, man. Behind the scenes, man. This is what you're getting.
This is the type of stuff that that specific person is searching for on YouTube.
Yeah.
Like, hey, the breakdown of the numbers of a home purchase.
Yeah.
Like, well, if you found this video, congratulations.
Good for you.
Yeah.
But this is what it is, man. This is what we do. Like I said, if you guys, you're subscribed, you follow, anyone that is looking to purchase a home, all we ask is for an opportunity to show them what we can do.
Share the episode.
Yeah,
share the episode with somebody who's thinking about buying, who is having doubts, doesn't really know a lot about the process. Share the episode. Send it to them. See if they will find value in it. And
what most often happens is that, your friend went somewhere and they told him exactly what I told you. For this house, they told him $26,000 to buy it, and I think it was $27.30 a month, right? And then your friend probably said, "Man, I can't do that right now," and then just gave up on buying a house.
Yeah,
you see what I'm saying?
This episode is like, the way I look at it is like you speaking to a lender without having to speak to a lender.
Yeah,
because this is what you're going to talk about.
Yes.
And we're asking the questions for you. And of course, if you have a question that we didn't cover, you have something that...
Man, hit us up, man.
Hit us up.
Yeah.
Shoot us a DM. All our information will be linked in the description. And, we look forward to hearing from you guys.
Yeah.
Yep. So I have numbers on paying those points. So paying the points, which basically means using up the entire $5,000 that we have left over.
That's fine.
We would now be at a rate. We would go from the rate of a 6.75 to a 5.75.
Let's go.
So that's a humongous savings. That would bring our payment down to about $2,507. So a little over $200 in savings.
There we go. We found them $200, and they accomplished all of it with their budget, man.
Their budget, $12,250 is what they'd be bringing to the table, and
it's a big difference.
Hold on. It was $26,000 these people needed, and how much they're coming with now?
$12,000.
So they're coming with less money, and the payment went down. Let's go, baby.
Yeah.
That's what I'm talking about. And then people are going to sit here. I don't know if you guys are going to question us or not believe us. These are facts. Like, we're out here. We can prove it to you. You know what I mean? So it's not like we're just making stuff up, or we're not giving you one detail or omitting stuff.
Yep.
That's exactly what we're trying not to do here. You know what I mean? Giving you the full picture, not omitting anything, not trying to kind of, steer you or deceive you or whatever it is. You know what I mean?
These are things that are real. This is what we are able to do for you.
We're doing it right now. Yeah, we're accomplishing these things. So yeah, man. So last time, one more recap for this one. Let's say you found a property in Anne Arundel County that you like, something like this on Nursery, right? Nice, 4 bedrooms, 2 baths, great. Looks like decent condition, right? You could come in here and buy this with $12,500, and your payment will end up around $2,500.
Right.
Yep.
There you go. I mean, that's raw numbers. Now, obviously, maybe if you had like a 800 credit score or something like that, then
it could be better.
It could be a little better.
And then,
what I mean?
one detail, to recap that same thing. Yeah. This is a scenario of a 2-person household, husband and wife, let's say, each making $40,000 a year.
It's not unrealistic, man.
Exactly, not unrealistic.
Yeah.
So this is very affordable to that particular person.
Yeah, the median income in Anne Arundel County, it said it was about $48,000.
There you go.
You see what I'm saying? So this is like realistic.
Yeah,
You know
very
what I mean?
realistic.
We're not just
We're not pulling numbers out of nowhere.
yeah, or picking a special house. You know, no, we just picked the house off a list. You know,
A
what I mean?
random house.
We can keep doing it all day, bro. We can keep going county by county finding new houses. This is what we do. But yeah, I guess the point was, hey, understand what you're getting into, right? And work with people that are actually trying to help you and understand your situation, and can try to find you a better way to get it done, right?
Of course.
Yeah. So.
Yeah. Well, I think that wraps it up, guys.
I think so, man.
Yeah, man.
This was a very lengthy episode.
Hey, what are we at?
Hour 24 minutes.
Are you serious?
That's good, though.
We just talked for an hour. Wow. Okay.
Yeah.
And
We're gonna have to chop it up.
What I like about this is that we were able to give realistic scenarios.
Yes.
Yeah, this was
We're
like we didn't cut corners. We gave it to you guys straight up, and whatever, like I said, whatever we didn't cover, comment, send us a DM, and let us know. We will get to you as soon as possible. And on that note, fellas, anything left to say for the people?
Nah, I mean, just Alvin, thank you for joining us again, man. Lots of information, bro.
Thank you.
My man's a numbers wizard, bro. El rompecabezas, le digo yo, el armador de rompecabezas, le digo yo, you know what I mean?
Yeah.
Yeah, because I understand people have all kinds of scenarios, you know what I mean?
Yeah.
How they make their money, they Uber, they do this, they do that. I work HR, I do whatever it is. We've seen it before, and we adapt to the situation, right? And we can advise you, man, because like I just said, we've seen it before.
Right.
So we can tell you, hey, you might not want to do it this way, maybe this way, right? And I think that's what people really need. And I'm telling you, people, like, shop around, right?
Yeah.
And don't feel discouraged about if someone, makes you feel discouraged. You probably don't want to work with this person anyways, right? Talk to somebody that's going to give you options, possibilities, you know what I mean? Yeah. It's going to speak to you in a positive way about your home purchase, right? It's not going to say, you don't want to go there. No, I mean, if that's what the person wants, that's what they want. Yeah. Now, I see, like, my job is to tell you how to get there. You see what I'm saying? Not how to get there, you know what I mean?
Right.
How to get there and not discourage you from getting there, because you might do it, man.
And how many ways there is to get
lots of different paths to get to the same,
that's where,
goal.
The agent lender combo come in handy because, you being upfront and honest about your situation and telling us what's going on with everything, we're able to analyze it. You're looking at it one way. But we're looking at it how we can best help you, right? Okay, hey, this is all the options available to you. Which one sounds better for you?
Exactly. Which one works, man?
Let's do it. Put it in action, and let's get you into a home.
There you go, Alvinito.
Yep. No. Just
close us out, man. Take us home. Bring us home.
Piggybacking off of what you said, man. I think it's crucial to have a good team behind you. Start off with your realtor. Get them to get you hooked up with a lender who's going to be committed to helping you out as well. Ask your lender about all options that you have available to you as a first-time buyer. Look for all the down payment assistance programs that they could get you with. Talk about paying for points, lowering your rate. Talk about with your realtor about getting you some seller credit if it's possible for that particular scenario. Just make sure that they're on your side.
Of course.
That's essentially what I want to make sure that everybody takes from this, that these numbers that we went over are real. These are things that we're able and we have the capacity to do, and that find a team that is if you're not in the areas that we're able to help out with, that you find a team that's able to help you, and if you are in the DMV, reach out to us. This is what we're doing.
And even if you're not in the DMV, we have networks, man. Like we're plugged in. We got agents California, Texas, Florida that we have relationships with. You reach out to us and we can put you in like-minded people like us, what I mean? That have a philosophy of trying to help, not just push people in houses, but actually try to put them in good situations, man, because I want that 5-star review, baby. You know what I mean? I want that good review, you know what I mean? And if they didn't put you in that situation, you're not going to give that kind of review, man. So we strive for that, man. You know what I mean? Hey, I know we're long, man. And I don't want to keep on adding to it, but I think we did overlook one aspect of social. I was just thinking about it. Remember, when these people purchase, there's a tax benefit now too, and we didn't really talk about that.
Yeah.
But just real quick, if you're on the borderline of a house, man, and 200, maybe $150, $300 just keeping you from making the decision of buying this house or not. Remember, at the end of the year, right, you're going to get a credit on the interest you paid on this mortgage. That's usually, right, usually in a house like this, about $3,000-$4,000, right? If you do the math, right, those that tax credit that's going to cover at the end of the year, right, it's going to cover that extra $150, $200 that you're worrying about. Because right now you're renting, so you're
not getting any benefit.
You're not thinking about that, right? Because the accountant, when you go to your taxes and they ask you, hey, do you own a rent? And you said rent, he's no longer even talking to you about, hey, let's
ask you any further questions.
Yeah, let's talk.
There's no tax breaks on that.
You're not getting any benefit tax wise from renting, right?
Correct.
And you will when you own this house. And that, if I'm just saying, for the people that, man, they're like, man, $200. How am I gonna find this $200? Find it, and at the end of the year, I'm telling you, you're gonna get that back. And that was awesome. I just want to close with that.
On that note, this was another episode. If you like the content, please drop a like, share, comment, and we will see you guys in the next episode. For the People's Real Estate Podcast, this has been Carlos,
Renee,
and Alvin.
See you guys in the next one.
All right, man. That was a blast, fellas.
That was good.
Good
That
stuff.
was a good one, man.
Very good stuff.